What is going on, guys? Welcome back. It is Institutional here, and I'm here with a video. We're going to get started with a multiple step series. And then basically what it's going to be about is how we shift from a retail ideology or retail mindset to SMC trading. So first, I want to begin with this series with saying that retail concepts, as people like to put it, they're not bad. You can literally trade support and resistance. You could trade Fibonacci's, you could trade trend lines, you could trade whatever it is that you like. I have a lot of friends that trade supply and demand, that trade simple support breaks and are still profitable. So at the end of the day, if you're looking for a way out, right, 90% of the time, it's not going to be in your trading. It's going to be in your psychology, because you could have a solid plan on what you're looking for. But if you don't have a psychology to follow that plan when it comes to risk management, when it comes to following your trading plan, when it comes to being patient, then no plan will work for you. It does not matter what you learn or what you don't learn. It all comes down to psychology. So that's a major part as well when it comes to SMC trading. It's being patient. But I wanted to start with saying that because, like I said, I have a lot of friends that do trade quote unquote dumb money or whatever you want to call it, and they're still profitable. So it doesn't matter at the end of the day. But how we want to get started with smart money is, first of all, there's a couple of terms that we need to start learning, right? And those terms will be accumulation, manipulation, and distribution. These are probably the principles of smart money. Price, what it tends to do is you'll have price, if it is in a buying trend, you will have what is called manipulation. So it'll be something like this, right? Then you'll have what is called, accumulation. Then you'll have what is called manipulation, right? Then you'll have reaccumulation, another reaccumulation, and then you'll have the distribution phase when they're unloading their positions. And then from there, we'll go into accumulation phase from a sell model, and we can go from there, right? And price keeps on going. So this is, I'm showing you guys the market maker buy model or sell model, right? But we're not going to get to that now. It's just understanding the terms. So basically what accumulation is when the algorithm or banks or somebody, whatever you want to call it, they are accumulating their positions. So they're loading up their positions. Think about it like this. They are not able to add whatever amount of money they're adding in a single trade, because that will essentially break the market, right? So what they need to do, like for example, if we're looking at this as accumulation, you can see how here they were adding their positions. They were adding positions, adding positions, adding positions. And all of these levels, all of these drives that we had to the downside, what smart money was essentially doing was they were adding their longs. They were confusing the trader that was still looking for the shorts. And once they give you that manipulation all the way down, it's not to say you can't capitalize from that, but then we go into the bullish trend where price again now pushes up, accumulation, pushes up again, accumulation, manipulation, and gives you another expansion, right? And that's how you start looking at price. You start looking at it as accumulation, manipulation, and distribution. So this could be distribution, where now they're loading their positions because it's Friday. So the buys that they were going for with this accumulation that they were adding here, right? So this is accumulation, here's your manipulation, and here is now your distribution, where they're closing other trades for Friday from the longs that they had all the way down here, right? So that's a little simplification of it. Now, another thing I want to say, when it comes to smart money trading, we don't use indicators. We don't use RSI. We don't use trend lines. We don't use none of that. Those are, majority of them are, they're mathematical and they're delayed data. So when you're looking at it, it's already too late. You might have missed a trend. So you don't want to look at any indicators. If you guys want to look at one indicator and one indicator only, the only one that I'll recommend will be the daily open, okay? So the daily open, what this tells me, what you're looking for essentially, if you're in a bearish and you're looking for price to come above that. And when price comes above that, this is what is called the Judas swing. So this will be your manipulation phase. If you want to take a look at what we just covered as far as it goes to accumulation, manipulation, distribution, right? If we are in a bearish trend, right, and we're looking for sells, well, what do you see here? Here you can see where price, again, they are accumulating for the sells. So they're adding the positions, adding the positions, adding the positions, and then they give you a Judas swing, which is the manipulation. Then over here, they drop price down. And once again, what do they do now? They are reaccumulating at the way up. So reaccumulating, they drop down. And essentially here, when market starts closing, they close their positions. So their shorts for the day is done. The algorithm has closed. Here's your move for the day. If we're looking at the next day, what do you see happens again, right? We have now accumulation for the shorts. So they're adding again their positions. they're bringing price up, adding again, they bring price down, they give you a manipulation right here, another reaccumulation, and then the day closes and they close their orders, and here is a distribution. If we look at the next day, once again, here you have accumulation, they bring price down, here you have some manipulation, reaccumulation, manipulation, and they bring price down. And then what do we do the next day? Well, we're in a bullish day, right? Here was your accumulation, right? So they were accumulating for the longs, they bring price up, you have some little bit of manipulation here, bring price up, reaccumulation, manipulation, and now distribution at the market close, right? And that's how you have to start seeing the market, right? Market starts moving between this accumulation, reaccumulation, manipulation, and then distribution. So we're looking for that. If we take a look at the daily candle, this is where we can actually start looking at price as a whole, right? This is where we can start getting a better understanding of what price is showing us. If we look at the daily candle, you're going to see it. Go put this to bar chart, right? And if we are in a bear trend, essentially right now with US 30, we can see how we are in a bear trend, right? And if you look at price as a whole, well, we have these phenomenons over and over again. And if you look at the daily candle, well, look at what price is doing. This is what we call the power of three, and this is taught by ICT. So all credits, they always go to ICT, but I'm just trying to make a little series so we can start getting things little by little and then start getting an understanding of SMC concepts as a whole, right? So again, we already understood as far as accumulation, distribution, and manipulation, right? Essentially what smart money traders do is they try to accumulate the price when 12 a.m. opens. Then they'll give you some sort of manipulation around London session. That's when you will get your Judas swing. After that, we will go to New York session where we will have the reaccumulation, and then we will have a new manipulation, and then price will go to its distribution phase, right? So if we look at price like that, right, and we're looking at things, well, this right here is what we call accumulation. So they're accumulating their longs or their shorts, sorry. They give you that manipulation, and then they bring price down over here. And here's a distribution, they close price down. If you look at it right here, these ticks right here, here is the open and here is the close. So if we look at it when we're in a bear trend, here again, they opened up right there. They give you that accumulation, manipulation, distribution, and then price closes. The next day, what do? Accumulation, manipulation, distribution, and then price closes. The next day, what do? Once again, what do they give you here? They give you that accumulation, manipulation, and distribution. The next day, well, the next day was a losing trade. And that's the way that things work. They don't always work out. Here we had a price that we had the accumulation from the longs where they give you manipulation and distributed it at the top. So we were looking back up towards this range, right? And if we look at this from an H perspective, here we'll have a level, or here we'll have a PD array, which we'll go over after. But basically, we understood that price has to rebalance. That's another thing. When you have price drop into levels, you need to have targets. You need to understand where liquidity is. You need to understand where imbalances are at, because majority of the time we will have rebalances, okay? So again, let's keep it going forward. So here again, we have what we can call accumulation, manipulation, distribution, right? And we just keep it going. You can see how when we are in a bear trend, when we're dropping down, you can have losing days. So there are some days here, if we look at this entire price action, when we were going for this liquidity level, right? There's days where price does tend to push up, but in these days that we are pushing up, we still get some sort of drop down, because that drop down will be your manipulation and price will go up. So this drop down, if you're trading as an SMC trader, and you can see that imbalances here being filled, and the 12 a.m. open is showing you bullish signs, then you're able to capitalize from that. Now, I know we don't understand yet what 12 a.m. open is, but like I said, I get sidetracked a lot. So I'm trying to get things little by little. Let's forget about the 12 a.m. open for now. Let's just understand the principles of it, right? So let's go back to the beginning. So once again, when we're trading as SMC trader, we don't want to have any indicators in our chart. If we have any indicator, it will only be the daily open. That's for extra confirmation. If you actually want to tell yourself or kind of have a visual of what price wants to do, right? But you don't need it. The next thing is we want to understand how price moves, right? And how does price move? It moves in terms of accumulation. What is accumulation? When smart money traders are accumulating their longs or shorts, to bring price either down or up, because it can't just add their 1,000 lots in one trade, because this will break the market. We will have a flash crash. We can't have that, right? We need to satisfy both the buyers and sellers. Then we have the manipulation, right? Because the Forex market, stock market, all these markets are heavily manipulated. So they want to grab the orders of the retail trader. If you're a retail trader and you're looking for shorts here, they want to grab your orders. So they were accumulating here all the way down to confuse you. Then they bring price up, give you that manipulation, and they bring price down, give you that distribution. And what are they doing here again? They're accumulating their shorts, they bring price down, give you that manipulation, and then here again, they're distributing all their shorts back down to this liquidity area, right? So we don't have to go over liquidity just yet again, but it's just how we start seeing trades, or we start seeing the market as an SMC trader, right? So now, once again, we have the accumulation, we have the manipulation, and then we have the distribution, all right? After that, the market either keeps going, it either gives you reaccumulation on the next day if we're in a bear trend. If we are reversing, then we'll get the opposite of that, right? We'll get the accumulation, reaccumulation, manipulation, and distribution from a bullish perspective, right? And what you'll see is these type of phenomenons will be identical, right? So if you look at price, here you would have your original consolidation. Here you will have your drop down where you have the manipulation, right? Here you will have accumulation again. Here you'll have reaccumulation, and here you'll have the distribution where they close their trades. So you can look at price like this, right? Now, when you're shifting from a bullish to bear trend, what smart money traders will do is they'll use these boxes where they were looking to buy, they'll now be looking to short. So this will complete now a market maker sell model, where here they will now be accumulating, but for the shorts, right? So you will have the same phenomenon from the upside, but from the sell side. And then you'll get that distribution where they close out their trades. And if you're going again, right? If you're going again from a seller's perspective, then they'll basically be doing the same thing. They'll keep bringing price in ranges. So start looking at ranges and start looking at levels where here they start accumulating, right? And then when it brings back up here, here is your manipulation, but it's not a bullish accumulation they're doing. They were actually adding their positions for the shorts. So if we take a look at this, let's say from M15 perspective from yesterday, right? We can see how here, once again, they were accumulating, but they were not accumulating for the shorts. They were accumulating for the longs, where they give you that accumulation, they give you that heavy manipulation where they grab all the orders from the shorts and they bring price right back up. And again, now they're accumulating. So they're adding the positions that people are looking at short now as long. So they bring price up again. And once again, they give you now reaccumulation, they give you that manipulation, and now they give you that distribution, right? So pretty simple, right? Like I said, no indicators. So looking at charts like that as far as accumulation, manipulation, and distribution goes, right? We'll go over now the market maker sell models, the market maker buy models, and all of that more in depth. And we will go over ranges, we will go over PT arrays, we'll go over order blocks, we'll go all of this in a step matter, but this is just the beginner video of it. So we can start understanding how we're actually supposed to look at the market in terms of a smart money trader. So I hope you guys got a bit from this video. I will see you guys in the next one. Take care, guys, and safe trading.